A quote here from SEC Chairman Gary Gensler. Today's settlement makes clear that crypto markets must comply with time-tested securities laws. What's up, YouTube? It's your boy Rhett, back at it again with another video. This past week, I've gotten a lot of messages from different people asking me what my thoughts are on the BlockFi SEC regulation that happened earlier this week and how I'm updating my CeFi strategy. So in this video, I'm going to be going through the actual statements released by the SEC that pertain to the BlockFi case. And I can imagine that this is very shocking for you. You've probably never watched a finance video on YouTube where someone is actually citing SEC documents instead of telling you to YOLO your paycheck into farming poop swap coins. But I'm way more mature than the poop swap farmers, and so this is the content that you're getting. The first statement we're going through is a summary of the SEC decision and then some reasoning that the SEC released to back up the decision that they made. And then the second statement that we're going through is a dissent written by SEC Commissioner Hester Peirce. And so if you're not sure what a dissent is, it's basically the way that lawyers say, I'm surrounded by idiots. So the SEC said, this is what's going to happen. And then Hester Peirce said, how did I end up in this situation where I'm working with all these morons? And then after we go through those two documents, I'm going to be giving you guys my opinion, not financial advice, not lawyer advice, of what I think is going to happen and what the outcome I think will be from these regulations. That being said, I'm going to have all the sources that I read through in this video down in the description. So you're more than welcome to go check those sources out after you watch this video and get yourself up to speed with anything that I didn't get to cover in this video. Hopefully that will help you see how I came to my conclusions and help you come to your own conclusions as well. Go down below and smash the like button for the first ever YouTube finance video where someone reads a report that's been released by the SEC, and let's level up your brain. So for anyone who is unaware, BlockFi announced in an email last week titled Pioneering a Path Forward to Regulatory Clarity that they're going to be freezing their BlockFi Interest Account product and registering a new product as a security. This comes on the back of the SEC announcing the first, but probably not last, major fine for a retail crypto lending company. BlockFi agreed to pay a $50 million settlement to the SEC and then agreed to also pay a $50 million settlement to various state regulators. And then next, BlockFi will be submitting paperwork to the SEC. The paperwork is called an S1 filing that upon approval would theoretically allow a new product called BlockFi Yield to take place of the BlockFi Interest Account and to be legally allowed for all Americans, basically. So what does this mean for investors like you and me who might have money in BlockFi? It means that for the time being, all interest accounts have stopped accepting new money into the interest account. Any money that's currently in a BlockFi Interest Account is going to continue earning yield at the same rate that it was before. And it seems like interest as well as credit card rewards from using the BlockFi credit card will be paid out to the BlockFi wallet, which is a non-interest bearing BlockFi custodial crypto wallet. You can sort of think of the BlockFi wallet as the same as keeping money on like Coinbase or Gemini, where it's basically just an exchange wallet. You're not earning interest, you're just trusting this company to hold the crypto that you put in that wallet for you. So not your keys, not your coins, and it doesn't earn interest. And while the BlockFi Interest Account can't take any new deposits, you can still withdraw your funds from the BlockFi Interest Account and use them however you see fit. But obviously, if you do transfer the coins out of the interest account, you can't put them back into the interest account because all deposits into the interest account have been frozen. And to be clear, if you're a BlockFi customer not in the United States, none of this applies to you. This only applies to BlockFi customers within the United States. Additionally, this only applies to the BlockFi Interest Account. None of the other BlockFi products have been affected by this decision from the SEC. If you're a BlockFi credit card user like I am, that product is working the exact same way that it was before, except the Bitcoin or whatever crypto you're earning rewards in is being deposited into, again, your BlockFi wallet, not the BlockFi Interest Account, so it's not earning that interest. So basically, you're stuck with what you've got, and if you do want to earn interest on your crypto, you're going to have to use another platform besides BlockFi, at least for the time being. As for some of the reasoning of why BlockFi was fined, BlockFi thought that like a normal bank that takes deposits, they wouldn't have to register their interest account as a security. But the SEC views BlockFi interest accounts as not the same as a bank deposit because crypto interest-bearing accounts are not protected by insurance in the same way that normal bank deposits are, that FDIC insurance and the other kinds of banking insurance. And therefore, investors like you and me shouldn't expect the same level of security and of low risk investing in a CeFi platform like BlockFi that we might expect from investing in a savings account like Ally Bank or Wells Fargo or Chase or any of those banks. Specifically, the SEC points out that BlockFi acted as an unregistered investment company because it issued securities and it held more than 40% of its assets in securities. securities. And also, and this is key because I've been saying this for like a year now, quote, the order also finds that BlockFi made a false and misleading statement for more than 2 years on its website concerning the level of risk in its loan portfolio and lending activity. Now, if you've been following this channel for any meaningful amount of time, or you've listened to any of the podcasts that BlockFi executives have done that I've linked in the description, so many times I can't even count it anymore, this quote from the SEC should not be surprising to you whatsoever. But if you're a normie who's just finding this out today, welcome to the party. Pretty much every other CeFi platform probably has the same issue. But without admitting or denying the SEC's claim, BlockFi agreed to cease and desist, which is basically a fancy legalese way of saying shut up and pay the fine. The SEC goes on to outline more risks in crypto asset investments, most of which I covered over the last year in a series of CeFi risk videos that I'll link up in the cards. I'm not trying to flex or anything, but Gary Gensler, if you need me to come up to Washington, D.C., I can make that happen. The risks that the SEC outlines here are volatility of the crypto markets, risk that the platform that you're holding the crypto in disappears or becomes bankrupt, uncertainty that certain crypto assets that you're investing in could disappear completely, changes in regulation, frauds and default risk, and then finally technical glitches or hacks that could result in you losing your funds. So now that we've gone through what happened to BlockFi and why, next let's hear why Hester Peirce thinks that the SEC is a bunch of dumbos. Hester starts her dissent by throwing shade at me personally when she says, quote, a lot of securities lawyers will nod. Yes, I saw this coming, which is something that I said literally 1 minute ago. She notes the BlockFi Interest Account failed the Howey test, something that I and lots of other people who are not lawyers on the internet think that most cryptocurrencies and altcoins will also fail when they are more heavily scrutinized by regulators. The good thing is though that you don't have to take my not a lawyer opinion. You can instead go down in the description and hear SEC Chairman Gary Gensler's opinion on specifically Ethereum, but I expect that this opinion would cascade through the altcoin market and, apply to all sorts of other altcoins. And you can hear him tell you basically the exact same thing. Hester goes on to say that while the SEC's legal analysis may be good, she questions the actions that the SEC is taking in freezing BlockFi funds and making them jump through these regulatory hurdles, and whether or not that's going to be good for retail customers like you and me. And this is really the crux of Hester's disagreement with the SEC. She thinks that while, quote, BlockFi's misrepresentations of over-collateralization are serious, the combined $100 million penalty nevertheless seems disproportionate, which is a fancy way of saying that even though everything that Rhett has been saying for the last year on these crypto CeFi platforms has been 100% correct, $100 million is still a really big fine to ask BlockFi to pay. She's basically saying, think of what BlockFi could do with those $100 million to help out really smart investors like Rhett instead of paying that money to the SEC. Hester goes on to say that BlockFi should be more transparent, and she thinks that this SEC S1 regulation process will achieve some additional level of transparency, but that maybe this regulation is not the best way to go about rolling out this crypto lending service to the general population of America. And she worries that possibly this regulation will stop BlockFi and other crypto lenders in the future from offering their services to non-accredited US investors. She also points out that the S1 registration process could end up being very lengthy for BlockFi and that there's no guarantee that BlockFi makes it through that process at all. And then she basically goes, this whole S1 and all these extra hoops are crazy. Just fill out the form and let them get back to doing business. Why are you freezing their accounts? Especially since we know that there are a bunch of other crypto lending companies out there who did not come to us and who did not seek regulatory approval, and that they're currently out there doing the same right now. She notes that the SEC often asks companies who are seeking regulatory clarity to come and talk to us. But then when BlockFi does come in and talk to them, they get hit with this massive fine. And meanwhile, all of their competitors are currently out there doing the exact same thing, telling their investors that they can make 600% APY farming poop swaps. Obviously, she said it a little bit fancier than that, but that's basically the gist of what she said. She goes on to reiterate that it would be good if we could offer these interest accounts to everyone and not just to rich accredited investors. So overall, Hester is totally based, complete bat. She hits the nail on the head here time and time again, and I really encourage you guys to go down in the description and read her dissent. I think that she really is on the side of the retail investor like you and me and really wants BlockFi and other crypto lending products to be pushed through this regulation and to be able to offer their services to really everyone in America. So what's going to be the long-term outcome of this regulation? If I look into my magical crystal ball, I think that if BlockFi can come out on the other side of this regulation and launch BlockFi Yield in a timely fashion, that they'll be by far the most credible and trustworthy crypto lending company in the entire space. And in my opinion, not legal advice, not financial advice, the idea that BlockFi is going to get regulated in this way, but that none of the other crypto lenders are going to have to deal with these exact same issues, I think is a little bit far-fetched. There's a reason that all these weird token incentives on these other platforms are not available to non-accredited investors in America. And there's probably a good reason that BlockFi doesn't allow its clients to earn 7,000% interest poop swap farming doggy doo-doo coin. Also, since I started writing this video, another crypto lending CeFi platform, Nexo, has announced that they're doing the exact same thing as BlockFi, freezing their interest account and seeking regulatory approval. I think ultimately this will fragment the crypto lending market into two separate groups: the regulatory compliant companies and the non-regulatory compliant companies. There might be advantages in the short term to not being regulatory compliant, in that you're able to offer higher interest rates, and that if you're up when these other companies are frozen and seeking regulation, business might flow to your platform. But I think in the long term, the companies that choose to operate within the regulatory framework are going to just be given so much more capital and advantages by large institutions that have to operate within the regulatory framework, that these non-regulatory companies, it's not really going to be an advantage for them anymore to continue to operate in the Cayman Islands, basically. Maybe they'll serve some, unique niche, but I think that these regulatory companies are going to grow a lot faster in the long term. You can sort of think about it today. You don't go seeking savings accounts in the Cayman Islands if they offer you slightly higher interest rate. You just go use Wells Fargo because it's easier. Hopefully this video helped you guys understand the SEC's opinion and their judgment on BlockFi. I think there's a lot of misinformation and out there about BlockFi right now, and weird fake FUD that's, oh, everything's going down, oh, regulation. And it seems like the people that are talking like that don't really understand what regulation means. If you guys are looking for further reading, or there's actually a really great podcast that Nick Carter and the Castle Island Ventures guys did down in the description, I think all those resources will help you even better understand this issue that BlockFi has been going through, and that I think more crypto lending companies are going to be going through in the coming months and years. And then if you guys did find this video helpful, please go down below and like the video so that YouTube spreads it around and we can get more legitimate analysis up on YouTube and less poop swap farming videos. Comment down below if you guys have any questions. I do still respond to all the comments. Next week, I'll be talking about what I like in a CeFi platform, and I'll be giving you guys some alternatives to BlockFi. So definitely come back here every Monday at 10 a.m. Eastern for that video, and then new videos every week. That's it for today. I love you all. Goodbye. But I'm way more mature than the poop fop